Okay, Rudy here. So, what is the US dollar? So, when people say the US dollar's up, the US dollar's down, what's that? How's it made up? Well, the US dollar, is what we're looking at here, it's actually a weighted average of a basket of currencies. So, you can see 57% of the USD is euro, Japanese yen 14%, the British pound 11, Canadian dollar 9, Swedish krona 4, Swiss franc 3, and so on. So effectively, you've got these four countries here that drive the value of this US dollar. And so you can see in the past, 1980s, woohoo, and then boom, rounded bottom, chucked out, breaks the inclining channel, and now we've just been going up and down in this inclining channel, and we're sitting right on. So that's a monthly chart. So we pull out to a weekly chart. So there's our long-term. So this is why everyone's saying, oh, the dollar's dead, but it hasn't died. But now there's been a bit of talk about the dollar's strong. So here we are. So we're at the bottom of this major trend line here. So we are forming, so this is a bullish, so a rounded bottom is a bullish sign. Doesn't mean, but it is bullish. But you can also see we're at a key. So you've got this rising channel here, key support level. So a break of the round number. So especially the 100. Wouldn't that be interesting? Because we've go to the weekly. Sorry. This 20-day moving average has been acting as good support. It's recently just dropped below it and has come back up. So you're at a critical juncture. So to help us try and fill out the picture, why don't we look at the other currencies? Okay, so this is the Euro, USD. Monthly charts back to the 70s. So you can see Euro's had its time. Everyone thinks Euro's a basket case. Probably is. But it has excelled against the US dollar. We've got a bit of a declining wedge here, flag pattern, which is very bullish when broken. So we're in this, it's would have been, I guess, an area of control in the past. And so if we just go to a weekly chart, so we have broken out of that. So that's first sign of a bullish trend. And we're forming a bit of a megaphone here. So obviously, so as this goes up, that goes down. Okay, the US dollar. So that's implying we're at the bottom of a short-term trend here for the euro to have a bounce. All right, so that's not looking like the euro is going to fall out of bed anytime soon. All right, we got the Japanese. All right, even back in the day, the Japanese had it, and then they've been caned since December 90. But we're at a key support level here with JPY. You see it's only forming a bit of a declining channel. It hasn't broken yet, but declining wedge, sorry, which when broken is bullish. And it's just hanging on there. Now, there's lots of things that goes into what's currency worth, interest rates, GDP, blah, blah, blah. So this is Japanese 2-year yields. So this is interest rates on a 2-year term deposit. Let's just say that. And you can see they went negative for a while. They've been hanging around zero. So why would you invest in Japan? You can't like for a currency, but look at this. Look at this. So, well, maybe it might be worth parking my money in Japan. They're not a basket case of a country. They're very polite people, actually. So that, you'd think it would put a floor under this and imply some upside movement in the JPY. And just while we're looking at interest rates. So this is the US 2-year rates, which we find on the Substack channel. We do daily, weekly US ASX ETF shares, REX, resource focused, dividend focused. Anyway, so US 2-year rates we're following as a sort of a guide for the US dollar and gold prices. So again, we're forming an inclining wedge. Hasn't broken yet, so you can't say the 2-year is broken down, but it's not going up as fast as the JPY. So there's a few things at play. What about the POMs? Okay, so the Great Britain USD. So they generally haven't been doing too well over time, the POMs. But you can see they're right at the bottom of the range here. They haven't been much lower in life. And we are forming a bit of a bottom or a reverse head and shoulder pattern. So again, all in all, chance of it like dropping 20% versus the chance, I should say 10%, versus the chance of increasing 10%. I think if I had to have a bet, you'd say there's more upside there than downside. And then finish off with the neighbours, Canada. So again, Canada's at the bottom of their range, had a few spikes, had a spike down. So it might go down a bit more. But history shows it'll get bid up pretty quick. So what does that mean, Rudy? So it means that you can't predict, but this 100 marker is going to be key to watch. But just from looking at those different countries there, it's hard to see. They look like they're going to go up, which implies this goes down. So we'll be, and obviously if this does occur, then it'll put a rocket under gold and silver prices. Which I guess while we're here, we may as well have a look. Okay, so this is US dollar gold price. So you can see it has been a rocket ship. But again, we're forming this declining wedge here, and we're working into this rounded bottom here, which we push out. So this is a daily chart. So you can see we're getting some rounded. So it would set up nicely with a break of the USD. This would break through here and off gold goes. So from my point of view, and as long as gold's hanging above 4,000, I'd rather be invested in gold than trying to short the thing, that's for sure. So I can't predict what's going to happen, but they're the outcomes, and we just follow price action. So I hope you enjoyed that little educational video. I hope you can join the Substack channel. I think you can get a free 1-week trial if you sign up. We've got a great community who like to chat each day. Got little on Substack or talking about things, potential shares and whatnot. It's actually what prompted me to make this video, was the chatter on the site today. All right, have a good weekend.